And good evening. We are doing it live right here, weeknights in the 5 o'clock hour in Los Angeles. Mottek On Money, 5 nights a week for you, live on the air right here on 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks moving higher today. Traders extending the rally in November. Looks like the market sharing the latest comments from one of the Fed policymakers, reinforcing hopes that rate hikes are done for the time being. We've also seen mortgage rates ease quite a bit, coming off of 23-year highs recently. I'll talk about that part of the story tonight with Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist. We see the Dow coming in for a closing gain of just about 84 points today. The S&P 500 moved up 4.5, and the Nasdaq moved up just about 41 points. Stocks struggling for more gains into a strong November rally, as we've seen. Fed Governor Christopher Waller made some comments today that were cheered. Signs of a cooling economy could bring the target inflation rate back to 2%, the Fed's target inflation rate. For now, it's not clear if more rate hikes are warranted, though, he said. MarketWatch also noting Waller is regarded as one of the more hawkish members of the Fed's committee setting interest rates, historically inclining toward higher interest rates, so Wall Street is paying attention to his softening tone. Big news today in the financial world with Charles Munger, the vice chairman of Berkshire Hathaway, often described as billionaire Warren Buffett's right-hand man, dead today at the age of 99. Berkshire Hathaway shares pulling back. The company announced that it had been informed by Charlie Munger's family that he had died peacefully here in California this morning. A judge on the National Labor Relations Board has ruled Starbucks illegally fired a pair of workers from a Portland, Oregon store for their union activities and sympathies. The judge also ruled the coffee giant committed other unfair labor practices related to enforcing the company's dress code in a discriminatory way against union supporters, among other things. I'll discuss that and labor issues tonight with labor law attorney Thomas Lenz at the law firm Atkinson Adelson in the San Gabriel Valley. He'll be joining us live later this hour. But first, on your money, the markets, the economy, crypto too. Look at Bitcoin breaking above 38,000. The whole works tonight. Joining us live now, the one and only John Najarian. Dr. J, as he's known on the major financial networks for decades, including this program, co-founder of Market Rebellion. And he has the laser eyes on, too. He's been a busy guy lately at the New York Stock Exchange, hobnobbing with the biggest names in the business world this week. He's also big on X, formerly known as Twitter. John Najarian, thank you very much for coming to the line here this evening.
Oh, it's always my pleasure to talk with you and your great audience, Frank. So thank you.
Thank you very much, John Najarian. And I've been dying to talk to you about this big run-up in the cryptos this year, coming off that crypto winter, the ice age last year, and now Bitcoin back above 38,000 here. Let's start with the fun stuff and give us your view of this big move with Bitcoin, especially this year.
Well, and you could track it, folks, even if you don't trade Bitcoin. You could track it from one of 3 or 4 big stocks. Coinbase, of course, COIN. The stock was in the 80s, low 80s, prior to this big run-up. Now it's over $120 per share. Mara, which is Marathon Digital, or Riot Blockchain, RIOT, or MicroStrategy, MSTR. Those are 3 or 4 of the biggest stocks that have the most to gain or lose from adoption of Bitcoin in particular, although digital assets in general have definitely got a lot more focus, and Frank's been filling you guys in on why. It's because of this spot ETF that there's more and more feeling that that's going to be coming our way in the near term.
On the air live with Dr. J. John Najarian, and let me ask you about this move in Bitcoin as well as the others. Bitcoin, of course, has moved up more than 100%, but some of the other coins that you mentioned in the past, Solana, for example, has seen about a 400% gain this year. Take us right over the landscape here, which you track very closely. You have the laser eyes on, and we talked to the biggest fans of crypto here as well as the harshest critics. But give us your view of the crypto landscape here at the moment.
Sure. Well, you'd be hard to find a crypto bear right now. Some people would say that that might mean you should lighten up, but I believe that we still have more gas in the tank. Obviously, we do not have a spot ETF yet, and this is just anticipation of what could happen, but you can only imagine how much money could potentially flow into a stock-based product like an ETF, a spot ETF. And Frank has nailed it again, folks. Solana has had a monstrous move. And why is that? Partly because it had such a hammering from FTX, from Sam Bankman-Fried, because this was one of the big coins that they held. So that stock went down so hard, much harder than Bitcoin. And just as you've accurately said, Frank, it's now up 4 times what Bitcoin is up, really, in terms versus where it was just 6 or 8 months ago. Same thing with FTT. And no one can really give you a great explanation for that, including me. FTT is the coin for FTX. And so that they, of course, minted their own coin, and that one is up substantially. Again, without any real reason behind it, it's just one of the most noteworthy names. And if you're somebody who is lucky enough to be in one of those names when the markets are in this kind of mode, you're in a very good spot. And there's a lot of happy campers, I think, in Solana and FTT.
On your line with John Najarian, and looks like Sam Bankman-Fried, the former FTX guy, will not be doing anything in crypto. Apparently, he's trading in mackerel right now, the fish, in jail at the moment. I don't know if you saw that article, but maybe is there such thing as a mackerel coin? I guess he's actually trading it in the actual fish there, from what we understand.
Yeah, that's what I understood too. This is a guy who I have a hard time feeling sorry for. He lived very large, took a lot of people's money, and either gave it to political contributions or just straight out stole it. And that's what he was convicted of. We don't have to say alleged anymore. So as a human being, I feel sorry for him, but I feel far more sorry for his victims. And if he's in there trading fish, well, I hope he trades fish for a lot of years in prison.
He's going to be floundering in prison with that mackerel. So we'll wait and see what happens when he's sentenced pretty soon.
That's a good one, Frank.
Yeah. Thank you, John Najarian. And let me ask you, and then the Binance guy also out at the top, right? What do we need to know about that?
Well, they've got rid of 2 of the biggest players in crypto, but they also enjoyed their fame an awful lot, and perhaps it was ill-gotten, at least according to the pleadings that we've heard, both from the Binance head as well as Sam Bankman. They were either quite evil or quite educated in how to really run their companies, and instead treated other people's money as if it was theirs. And that's never going to be a good thing. I think getting those 2 big stories behind us, and yet having crypto react not in a negative way now, because obviously in July of last year when Sam was first noted, you saw the massive sell-off in crypto that took it back down, I think briefly below 18,000. Now here it is above 38,000 again, so a little over 120% or more to the upside. And it couldn't even be stopped by the Binance head paying a massive fine and basically taking a plea deal.
On there live with John Najarian, you had a chance to get to the New York Stock Exchange. I saw your postings on X, or formerly known as Twitter, with Jim Cramer and the rest of the group there. The big news today, certainly in the investment world, the passing of Charlie Munger, the right-hand man to Warren Buffett for years. I'm sure you must have interacted with him over many years at CNBC and the other networks. John, what are your thoughts about that big news today?
Well, I thought he was a brilliant man that was a calming influence. I think even Warren Buffett said that about him, as well as a guy that was more than willing to share his thoughts with everyday folks. Now, not everyday person could afford his stock, Berkshire Hathaway, but for the tens of thousands of people that attended their annual investor day, all you had to do was have a single share, even of the reduced value stock, because they have the regular Berkshire shares and they have the mini shares. If you had one single share, you could attend that conference and potentially ask Charlie Munger and Warren Buffett questions. And they took those questions for hours, 6 hours, 7 hours worth of questions. And, you know, it's rare that you have somebody who's that successful who will share their knowledge and their insights that liberally for no compensation, just because they wanted people to understand the markets the way they understood the markets. And he will be missed, but I'm sure Warren Buffett and Berkshire Hathaway are just fine in terms of how they will operate, but I'm sure there'll be a lot of sad faces tomorrow at Berkshire.
Certainly, and it is to be noted, as you properly pointed out, those two classes of Berkshire Hathaway shares, Class A and Class B. Class A shares, the most expensive stock on the New York Stock Exchange. One share of Berkshire Hathaway goes for $546,869. They've never had a stock split in the Class B shares, by the way. The less expensive one, $360 per share. That is really something. And we honor the memory of Charles Munger, the famous investor who was the right-hand man for Warren Buffett. At this point, John Najarian, taking a look at what's happening with the stock market and the economy, give us your view of things here and any specific places where you are putting money now and or taking it off the table.
Been taking off some money in a firm, AFRM, and not because I don't believe in it. This is a stock that's a buy now, pay later stock. And this is the exact time of year when you'd expect them to do so well. And they did. The stock has hit a 52-week high after 52-week high for the last several days. And it finally got to the point where we decided, okay, enough's enough. Let's take some profits and get out of this one. I believe in it still, but I do think it's endemic, or it's a sign of some of the public perhaps being a little too over-levered, Frank. Credit cards are one thing, and a layaway, which is more or less what a firm is, it's a way for people, again, to buy now and pay later for things that they really want. And yet that seems like it could be trouble in early 2024. So I don't like the idea of sticking around with that trade too long, but I do like a lot of real estate plays that have started to come much more in focus because of rates coming down, the 10-year breaking below 5%, coming all the way down to about 4.4%. That might not seem like a lot, folks, but it's driving rates down, and that's good for real estate plays like IYR, which is an ETF for REITs, as well as NLY, which is a mortgage REIT. And I like both of those, and in full disclosure, I'm long both of those two ETFs.
All right,
actually, the one's a stock. NLY is a stock, not an ETF. I misspoke.
On there live with John Najarian and the Magnificent Seven, of course, making big news this year and really leading the market higher in a big way. What are your thoughts about the Magnificent Seven, the big tech names, as we head into the new year?
Well, I was lucky enough, Frank, that I was on with Larry Kudlow tonight, and Larry and I were talking about whether or not we're going to see a recession next year. And I think, along with Stevie Cohen and a number of others, perhaps Charlie Munger before he passed, that we are going to see a recession, but it's not going to be a deep one, in my opinion. It will be instead something that is a rolling recession, sort of like last year it was discretionary stocks, communication stocks, IT stocks. This year, it's more or less the recessionary stocks have been all small caps. It's been a real problem for small caps to get any traction this year. And I think next year, some of those big seven stocks, they might take a break during January and February. But I think on any significant dip, by that I mean probably, close to that 20% sort of dip, I would be a buyer of those stocks. So that's what I anticipate in early January, is that those biggest tech stocks sort of ease to the downside, and then there'll be a pretty good opportunity to buy them there.
A lot of money was made this year with the oil names, which have since pulled back. And, of course, we're seeing the war between Israel and Hamas continue, although they've stopped shooting temporarily. The war is still on, and the tragedy there it continues to be played out following that horrific terror attack on Israel a month ago. The price of oil right now hovering at around $76 a barrel. What are your thoughts about that important component of the markets and the economy?
Well, as you've no doubt told your listeners, OPEC Plus will be meeting again on the 30th. They were going to meet yesterday. They telegraphed it a couple days ahead of that, and that's why the crude oil got soft again. They telegraphed that they would not be meeting on the 27th and instead meeting on the 30th. Some people took that as maybe that they were having trouble getting some of the folks in line to either hold with their cuts or provide more cuts. And that's perhaps why crude oil came down in price, both WTI as well as Brent, the European version. But I think overall, crude oil is a buy in the mid and low 70s when it gets there. And I think it's probably a sell as it pushes over 90. And I think it will again before year end.
Here we are after the Thanksgiving holiday weekend. You saw a share lip syncing there at the Macy's Day Parade, and we're into the holiday season here big time. What about the retailers? Give us an update on the retail landscape, and are you touching any of those names at this point?
I tell you, the broad market retailers I would, and by that, Frank, I mean I noted last week that Abercrombie & Fitch, A&F, American Eagle Outfitters, AEO, and a number of other single brand stores had not done well. But the ones that have been doing well seem to be the ones that carry multiple brands. And those would be the likes of Macy's and, to a much, much lesser extent, some of the discounters like TJ Maxx and Kohl's and things like that. But having a broad offering versus just a single name seems to be the way to go. And the consumer has been piling on debt again. And I've said already, I'm worried about that with Affirm and so forth. But it seems that the consumer, until they get hurt, is going to keep learning that tough lesson about taking on too much debt just because it's the holiday season.
John Najarian, thank you so much for taking the call here. Any plans to come out here to the Los Angeles area?
Oh, I hope so soon, Frank. I'd love to see you again. And in the meantime, I'll just keep listening to your program and keep up the great work, my friend.
Thanks a million. We wish you a great holiday season, John Najarian. Thank you very much. And say hi to Larry Kudlow, Charles Payne, Jim Cramer, Jonathan Honig, and all the folks we see you on X, Twitter, and Instagram. You're terrific, John. Thank you very much for joining us live here tonight.
Thank you, Frank. You too, sir.
Thank you very, very much. That is the one and only Dr. J, John Najarian, joining us live from New York this evening. And, of course, he's on the major financial networks for decades, including this program. We're very fortunate. Also co-founder of Market Rebellion. And as you heard, he has the laser eyes on, too, and has had a big year in the crypto space. Now, the latest on your ride tonight here on 790 KABC. Friends, people like you and me have our ear to the ground on all things business, and we like to be informed and well-prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. Do it right now, 833-88-SHARK. So if you're hurt in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, bicycle accidents, you name it. Call 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. 790 KABC welcomes Want to take a guess? Yeah, Bryan Adams coming to the Honda Center January 28th. Tickets are on sale now at Ticketmaster.com. And right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show furnished by Live Nation. Call now. Caller 9 wins 1-888-790-5222 for the great Bryan Adams coming to the Honda Center on January 28th. Mottek On Money continues here in 790 KABC. A winning day for the stock market. The Dow up 83 points, settling at 35,417. The S&P 500 moved at 4 at 4,555, and the Nasdaq gained 41 at 14,282. Well, the cryptos are very much in focus these days, with Bitcoin popping above 38,000 for only the second time this year. Some market experts have been quick to suggest the digital asset could soon break 40,000 and beyond, according to the folks at the street and others. We see Bitcoin right now down about $20 at 37,708. Ethereum down 5 at 2,049, and Doge at 8 cents. Taking a look at some of the other movers today, we see Boeing shares moving about 1.5% higher after an upgrade to outperform from analysts at RBC Capital Markets. Analysts there said 2024 looked favorable for Boeing, including improving execution of the Boeing MAX and 787. Analysts lifting the price target on Boeing to $275 from $200. And we see Avidity Biosciences shares moving up 15% today after the firm said it's broadening its cardiovascular collaboration with Bristol-Myers Squibb. The company Avidity is developing new types of RNA therapeutics, and Bristol-Myers Squibb, according to MarketWatch, is funding clinical development as well as the regulatory and commercialization costs tied to that collaboration. And now the latest news for you right here on 790 KABC. Mottek On Money continues here in 790 KABC. Turning now to real estate, home prices continue to set record highs nationwide despite mortgage rates hitting 23-year highs recently. We got the latest S&P CoreLogic Case-Shiller National Home Price Index today, up 0.7% nationwide in the month of September from August. Here in the Los Angeles area, we're seeing prices move up as well. In fact, up 0.2% month to month and up 5.2% year over year. In San Diego, prices were flat month to month, but up 6.5% over the past year. In San Francisco, prices up 0.1%, up just 0.5% for the year so far, according to that latest reading. We're seeing some of the hot markets these days include San Diego with that big jump in the price rise over the past year. Some of the other cities, Detroit, for example, also having a big year. Mortgage rates, meanwhile, have pulled back from the recent highs this year. Let's bring in our expert now, and that is Jeff Lazarson, the president of MortgageGrader.com, also Orange County Registered Real Estate columnist. Jeff, thank you very much for taking the call. It's been a while since we've chatted behind live microphones, and I think last time we spoke, we had mortgage rates at 23-year highs. They've come down now. How are the mortgage rates looking right now?
Frank, they're actually coming way down, but I just got to tell you one thing before we get started. You make me laugh. I'm listening to your show before I went on the air, and I'm just dying. I think I'm going to sign you up for late-night television after your radio show's over. I don't know. It's really funny.
Thank you.
Thank you.
Thank you, Jeff.
Anyways, back to the rates. So rates are actually looking really good since the last time I talked to you. The 30-year fixed is at 6.75% at one point. The 15-year fixed rate is at 6.25% at one point. And as of today, that loan limit, the Fannie Mae loan limit, has now gone up to $766,550. The Federal Housing Finance Agency made the announcement today. It's only up 5.56% from last year. So as it is, yesterday anyways, it was $726,200, and again, starting today, it's $766,550. The high balance interest rates are 7.18% at one point, and the 15-year high balance is at 6.78% at one point, and the high balance also went up pretty nicely. So as of today, you can get $1,149,825 in LA and Orange County for a high balance loan. So not for the Inland Empire, but for LA and Orange County.
They're live with Jeff Lazarson, and we're seeing those home prices. Jeff, I don't know whether to laugh or cry as we see home prices continue to set record highs despite the higher mortgage rates lately, but now they're coming back down. What do you see ahead for home prices here?
Well, I don't see much change with it's a horrible mess, and I have come to the conclusion if you're not wealthy or if you don't have deep-pocketed parents or you haven't won the lottery, it's really going to be hard to become a first-time buyer in Southern California. Every day I have these conversations. I had a fellow out in Riverside. He has made countless offers on properties, and he's gone above and beyond the listing price, and he still loses out. So there's no relief on the pricing situation, at least not yet, and it's because that same old inventory problem. Everybody, sitting on the homes because it's an asset that keeps appreciating in value, and there's not much to choose from. The good news for everybody, anyways, is rates have come down. I mean, the 10-year Treasury it topped out at about 4.99% a few weeks ago, and now it's down to 4.31%. So, almost 70 basis points difference. So the mortgage rates are down, not enough to make refi mania start again, but if it hits about 6% on the 30-year fix, then that will go again. For the buyers, though, Frank, I would tell anybody that is thinking about buying, if you could at all possibly afford to buy, do it now while rates are a little bit higher and we're in the holiday season slow time, if you will, because when rates come down sometime next year, it's going to be a stampede all over again. And so, for example, right now, there's a zero-down FHA loan out there that if you can afford that high payment, you can get in and then refinance later. So it's just a hot mess for buyers, at least first-time buyers right now.
On the air live with Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist, and certainly with Hollywood shut down basically this whole year, and just now the actors' strike vote is coming in and will be wrapped up hopefully early next month. And what about the impact of all of that and the other labor action we've seen? And obviously jobs are really the key component as far as real estate activity, as we've seen historically. Jeff, what is the buzz out there given what's happened this year?
Well, I think it's a real mixed bag with this. The wage growth obviously creates inflation. So it's just this vicious cycle of wage and price hikes. And even though rates in the near term are starting to come down, I'm not sure we've seen the end of this inflation thing. And I would not be at all surprised if we see another Fed rate increase next year. There's a lot of really nasty triggers out there that can cause it, including the Middle East situation. But wages, people are getting big raises all over, and we still have this laziness factor, I'll call it, where you have workers that want $1 million a month and they don't want to work for it, and so it just causes all kinds of pressures and people that own businesses have to raise prices, and we're just stuck all over again. So I don't think it's over just yet. I think we're going to see one more bump, and then we're going to go kerplunk with a really hard recession next year, but probably not till the middle of the year.
All right, and what about what's happening with these lawsuits over real estate commissions and that big ruling recently? There's talk that some of these lawsuits could upend the real estate market. What's the buzz here in Southern California about that?
Well, for me personally, Frank, I say it's about time that this all came to light. I've been writing this column for more than 12 years now, and I've written countless columns about this issue about the real estate agents overcharging for their services and all that. So essentially, this antitrust lawsuit, it's going to end the real estate agent representation on the buyer side largely. So the buyers are going to end up probably their mortgage loan originator is going to be doing their mortgage and not writing the offer for them, but probably supporting them, behind the scenes, or they're going to have to get a lawyer or something. The good news, though, for everybody is the home prices will go down a little bit because instead of that 5 or 6% commission tagged on every house, which increases the price for everybody. Maybe the listing agents are going to, get 1 or 2%. And there was a company out of England called Purple Bricks. They had a great model. It was a flat fee model, and they were a little bit ahead of their time, and they crashed and burned a few years ago, so they're completely out of business. But somebody like a Zillow or a Costco or even an Amazon, with all the technology out there, the whole the realtor trade, I think, is better be counting its last days, because I just see something else coming up that's going to make the transactions a lot more affordable than they have been.
All right, well, we'll look forward to your upcoming columns in the Orange County Register and the other Southern California newspapers here. Jeff, thank you very much for that comprehensive update tonight. That's Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist. We wish you a wonderful holiday season, Jeff, and look forward to speaking with you again very soon.
Thanks, Frank. Keep them laughing.
All right, let's do it. Right now, let's head out to the freeways here in 790 KBC. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and well prepared. And as important as finance is, I want to make sure you have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. Even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend attorney Clark Fielding's number in your phone. Do it now, 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit-and-run, boating, or bike accidents, you name it. Call 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. 2023 was a big year for strikes. A lot of labor action. And the latest, a judge on the National Labor Relations Board ruling Starbucks illegally fired a pair of workers from a Portland, Oregon store for their union activities and sympathies. The judge also ruled the coffee giant committed other unfair labor practices related to enforcing the company's dress code in a discriminatory way against union supporters, among other things. Let's bring in labor law attorney Thomas Lenz now at the law firm Atkinson Andelson in the San Gabriel Valley, past chair of the Labor and Employment Section for the State Bar of California, and also lecturer in law at the USC Gould School of Law. In fact, I remember he started his career with the National Labor Relations Board here in Los Angeles. Attorney Thomas Lenz, thank you very much for taking the call here and for keeping us well-informed and well-analyzed on all the epic labor news this year. What's your reaction, first of all, on the Starbucks ruling by the National Labor Relations Board?
Well, thank you, Frank, for having me on tonight. And, the Starbucks ruling does not surprise me a whole lot. The National Labor Relations Board has, for many years, been handling cases involving alleged discrimination and retaliation against union supporters. This was such a case coming out of Oregon, and if you've been following what's been going on with Starbucks, it's been a national campaign. There have been cases filed all over the place, and this is one of the latest to result from a trial that was held up in Portland a few months back. And actually, one of the trial attorneys was out of the L.A. office. Interesting that they chose to send someone up there to do that. But the National Labor Relations Board has been looking at more lenient standards to prove discrimination and retaliation against employees, making it harder for employers to defend those cases. And at the same time, they have been exercising a lot more scrutiny than they had in previous years over policies and giving employees a lot of leeway in choosing what they can wear at work. So employers that want to perhaps tell employees not to have certain messages on their clothing or to forbid them from wearing pins, buttons, insignia, whether union or not, these are issues NLRB considers fair game for legal challenge and as demonstrated here.
Very interesting. So these things have evolved over the years. I know from speaking to you over many years, you've kept us well informed about the changes in labor law, which have increased a lot of protections for workers, including what they wear at work, right?
That's correct. And in fact, there was another ruling from Washington, D.C. at the top level of the National Labor Relations Board today, also involving Starbucks, and dealing with the issue of whether an employer can have a mandatory meeting to discuss union and union organizing issues with employees. In this instance, the board did not see fit to find that Starbucks violated the law because there was an element of voluntariness to the meeting. But I believe that NLRB is going to look very closely at restricting employers' rights even to have meetings with their own employees about these important issues.
Very interesting. Of course, we have thousands of Starbucks employees here in Southern California, so they're all paying attention, very close attention to what you're saying here at the moment with these high-profile rulings. So thank you for updating us with the very latest on that. And, Starbucks has closed a number of its locations here in the Los Angeles area. I've discussed this even with Rick Caruso on this program. At one of the most famous intersections in the world, at the corner of Hollywood and Vine, there was a Starbucks there, and it has closed because of crime and homelessness there in the Hollywood area. And I saw in the Wall Street Journal there was one labor strike over shoplifting. Crime became an issue with the Seattle area Macy's employees who say thieves are jeopardizing their safety, and the union walked out there. Is that becoming a bigger issue here as well?
I think it is popping up all over. And I think that if it comes in the midst of the union organizing campaign, the question will be why now? And has the problem, been the same for a while? Has it gotten worse lately? Because timing is often an issue in the legal analysis. But it definitely is something that we are seeing as cities deal with different crises throughout America. And, you want to certainly have a place that customers want to visit and where people feel comfortable doing business. And at the same time, you need to manage your workforce and your workplace. So there are some difficult issues being balanced. And I think, again, employers are a bit more under the microscope in the current times than they were maybe a few years ago.
All right. Now, of course, a lot of attention focused on the voting that's underway by SAG-AFTRA members on this contract, and a lot of discussion about the AI part of it. I think we spoke on the day the strike ended. Have you had a chance to take a look at the AI part of this deal?
I've seen some general things, and I think it's going to be very important as a starting point, really, to see how the world deals with AI in terms of monetizing it, protecting employees, protecting their images, and also ensuring that employers have the ability to be creative and to use technology. It's oftentimes in collective bargaining a matter of striking a balance so that management may not be able to do 100% of what they want or to do it without some sort of cost. I mean, this is going to I think give employees and the union greater notice of what's going on and provide some level of reward. I'm sure that as time goes on, there will be holes that are found in it. There will be things that either management or the union will want to shore up in future agreements, whether it's with SAG-AFTRA or possibly other unions that look at this as a model.
Labor law attorney Thomas Lenz at the law firm Atkinson Adelson in the San Gabriel Valley, past chair of the Labor and Employment section for the State Bar of California, also lecturer in law at the USC Gould School of Law, also prominent business leader in the San Gabriel Valley. It was great seeing you at the San Gabriel Valley Economic Partnership Gala recently. Thomas Lenz, thank you very much for taking the call here tonight.
My pleasure, Frank.
Thank you very, very much. Coming up next, it's the 790 KBC News Blitz with our legal eagle, Royal Oaks, coming your way next right here on 790 KBC.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show.
Tennessee Congressman Tim Burchett.
Where do the majority of UAP sightings happen?
Yeah, military installations, but I couch that. I mean, if they're going to fly here and check something out, they're going to see where our best and brightest are, I would assume. They asked me about seeing any UFOs in Washington, D.C., and I said, no. I said, there's no intelligent life around here.
The Sean Ryan Show on YouTube or wherever you listen.